Hello. So I thought I'd do more of a high-level talk about virtual currencies and the patterns we're seeing. So my name is Robbie Andrews. If you are on Twitter, you can follow me at BearPig. I started researching virtual currencies and Bitcoin especially a number of years ago, and early 2014 started a meetup and information portal, bit.coin.je, and pushed forward the idea that maybe Jersey could be a place where virtual currencies or Bitcoin could be furthered as far as, you know, the marrying of an emergent digital space and the existing finance sector. And that was fairly well received. A lot of people in the space at the time were still looking for a jurisdiction that was, if not enthusiastic, sympathetic to the needs of the sector. Whether Jersey moved faster than some other jurisdictions at the time is to be debated, but I think hopefully when George speaks in a bit, we'll see that the paths we've made going forwards are probably the right ones compared to some other jurisdictions. So talking about virtual currencies, you know, the word virtual is that it is has the qualities of something without being physical, essentially. And currency, some of you might recognise this graph, especially that bit right on the right. Anyone guess what this is? So yeah, it's what the pound did on the news of the Brexit. So currency. So virtual currencies, as defined by the European Central Bank in 2012, is an unregulated digital money which is issued and usually controlled by its developers. There are some points that I would probably argue. Unregulated, I would argue it's regulated en masse by the code that implements it. Issued, again, by the code and maybe not by the developers. But again, you know, this was a number of years ago and the landscape has changed. And isn't most currency virtual? From the numbers I could find, 95% of the money across the world is digital, or at least not cash. So the idea of something being virtual and digital, in my mind, especially in currency, could be seen as being one and the same. But what is the benefits of obviously this amount of money in the world being digital or virtual? So obviously it weighs less, you know, it's bytes in a machine, easier to store, you can scale up that quite easily, easier to transact, you know, you don't have to ship a physical good, that's quite useful, easier to scale. There are some arguments around certain virtual currency platforms that scalability has been an issue traditionally, but again, probably easier than printing a lot more money unless you already have the printers running. Harder to damage. Again, if it's digital, then you can implement normal procedures. If it's cash and there's a fire, it burns, it's hard to reproduce. Easier to track. So it's often raised that a large amount of the nefarious business in the world is done in cash, or at least other forms of money. It's very, very hard to track cash. If you have a form of digital cash, there are easier ways of tracking its use. So also this leads to innovation if virtual currencies and digital currencies are being furthered. Protocol-based payments, Bitcoin being the main one that everyone would be familiar with. Microtransactions, if you're no longer pegged to pence and cents, but percentages of that, you can start looking at, could we implement a much, much smaller payments than we can feasibly do at the moment. Crowdfunding, I'll touch on this in a minute, but again, if anyone can interact with anyone else on a platform and not have to be approved at certain stages, crowdfunding becomes a lot easier. Mobile payments, again, if it's inherently digital, you start looking at how certain generations are using payment platforms. Carrying cash seems quite weird. Platform integration payments. You're already seeing certain social media platforms look at, can they integrate payments on the platform itself? WhatsApp in America has been trialing this, that if I want to send an amount to someone, I just send at $5 to them. And because I've already registered a card with either side, the payment goes through. Now, the back end of that is a more traditional platform, but it's interesting to see how the notion of a social platform thinks payment should be part of this. And a global payments platform. If I can send someone an amount of money as easy as I can, an email address or a WhatsApp message or a tweet, it's fairly irrelevant where they are in the world, that just they're on the system or they're online. So you're starting to see, especially with Bitcoin, the fact that the idea of borders around certain jurisdictions and people inside those fall apart, because if you're online and part of the network, you can transact. Going a step further, because it's digital, you can start look at programming the money and using the protocol behind it. And this has led to ideas such as smart contracts, where the transactions complete based on some pre-approved conditions. You might look at having KYC or risk profiles built into transactions, which at the moment are a large manual process. So you're starting to see a couple of companies look at, again, on Bitcoin, could this be done in a way that doesn't impact security? And again, there's a look at, could you tie assets into a transaction or the ownership of a certain amount? In Bitcoin space, it's known as colored coins. So maybe IP of something, or an asset, or precious metal, or high value good, that when you transact, the ownership of that is transferred to the person you transact with. So this leads me on to the DAO, which some of you might have read a couple of articles in the last week. So the DAO stands for Decentralized Autonomous Organization, and it's built on a platform called Ethereum, which was designed to be, if Bitcoin is a decentralized currency, cryptocurrency, Ethereum is a way of decentralized code that can be enacted on that. It was the idea behind the DAO was that it could build into code the rules and decision-making process of an organization to eliminate the need and allow, obviously, to scale a lot easier. And it's been called an investment fund managed by a computer program. It launched earlier this year and had a 28-day funding window. It quickly became the largest crowdfunding in history, and raised over 150 million in Ethereum for more than 11,000 backers. There are currently 50 or so projects in the DAO waiting to be funded. So everyone who's invested then says, oh, that sounds like a great project. We can all agree that that gets a certain amount of funding or whatever they're asking for, and it decides en masse. The problem was there was a hack. So a flaw was discovered that allowed someone to drain, at this time, about 3.6 million Ether. So that roughly equates to, at the moment, about 44 million US dollars, $45 million. The issue was, as it says here, so someone could continue a transaction session and your balance would only update at the end of that session. So someone just kept it open, kept on requesting it, and essentially got rewarded this amount for running this process on the network. So it's been argued that the attacker has just implemented the code in a way that already exists and could move funds to a wallet they controlled. And if the code allowed it and the investors were investing in the code as an idea, is it still stealing, or was it just implementing the code? So I'll take some questions on that in a bit, but I just want to move on what I see as emerging trends in the future. So you're already seeing a generation come through where they're digitally native. The idea of carrying around cash seems archaic, and they're used to digital ways of communicating and living in general. And you're starting to see applications for that. So NFC, people carry a card, they tap. The interaction of that is a lot easier than handing over some coins or notes, waiting for change, having to carry out that round. Again, with Apple Pay, you're seeing a massive potential user base for people with iTunes accounts. If at some point, I assume Apple are going to allow Apple Pay to Apple Pay transactions, and suddenly, do you need a bank? If you know everyone else you need to pay or deal with, is on Apple Pay, why would you ever go against it? And again, people, I did a talk a while ago at a primary school over here and asked a room full of 11-year-olds, how many of you buy things online? About 3/4 of their hands went up. And I said, okay, well, how? And okay, parents' credit cards. And a lot of people said PayPal. And I said, okay, well, what card is based on the PayPal account? Oh, parents' credit cards, but I have my login. Okay. So at the moment, there's an entire generation that sees that as their bank. And you know, you can say a number of things about PayPal themselves, but they've been very, very integral in getting a large amount of the population to understand that transacting online can be easier than doing it physically. You're seeing traditional safe currencies no longer being stable or fit for purpose. You know, if maybe, you know, you're looking at the pound, whatever that's going to do in the near future, and you want to implement microtransactions, the smallest microtransaction you can send, even if your bank allowed it, would be a penny, which is still very expensive for certain things if you want to do them at scale. And the currency of the future is probably going to succeed on the applied use. So is it more useful to me as a user to transact with this than whatever I've used previously? Because you're seeing that pattern with systems in general and especially social platforms. So I see it as a reasonable expectation that the generations coming through are going to have exactly the same attitude to currency. You already see that in certain countries where the US dollar is used because the traditional currency is not as useful. So how can you try this for yourself? So I'm pleased to announce that the machine behind that gentleman over there is our Lamassu Bitcoin ATM. We've had it for a number of years and finally is en route to being pushed live. We should be able to launch it in a number of days. But it's also the first, to my knowledge, ATM that will allow you to buy Ethereum through it as well. Okay, so this is our Lamassu Bitcoin ATM. It's running software that allows us to sell both Bitcoin and Ethereum through it using the same process. So open up my Ethereum wallet on my phone, approach the machine. It asks them to scan their QR code of their wallet address, which you hold up here. It verifies it's a correct wallet address and prints it there. Then asks you to insert a note. So if I put in £5, it will say, do you want, it's got £5 already, it will sell you for this much, do you want to send coins? Sending the coins, it will then, if you want, you can take a photo of the screen. That will be your transaction ID and a QR code that you can look up. And then if I refresh my wallet, okay. So that's just confirmed now and updated. So it being Ethereum, the transaction time is a lot quicker than Bitcoin. But it is really that easy. And we looked at the easiest way that someone could purchase cryptocurrency in small amounts without having to go through an exchange that asks a lot of identity questions or KYC, if all you want is a small amount to play with and prototype. You know, I'm a big Bitcoin fan, but there are problems with Bitcoin in especially the near future, but going forwards, I think the ability to add different currencies as they come and being able to prototype things with them is fairly important for a location like Jersey. So, thank you. Any questions?
Thank you very much. Do we have questions for Robbie? Here we go.
Simon Angelo, AdZ, third-party marketing. Robbie, I'm just interested, we've seen the pound tank as a result of Brexit. Has there been any work done on what Bitcoin is correlated to? Is it correlated to any other market forces? It seems to have risen amongst all this.
The conversation around what affects the price of Bitcoin is a long and interesting conversation. And anyone that tells you it's correlated to any specific thing is probably lying. You saw the price go up a fair amount leading up to the Brexit. But then a large Chinese exchange went offline for a couple of days, and that forced the price down again. You saw it steadily climb up again, and then today it's shifted another £40 because of a rumour that the scalability problems might be sorted in the near future. I think it's probably a better question for the hedge fund in the room. That probably, but it's traditionally it was correlated to the amount of people using it. So when it went over, the dollar parity, it was worth more than $1 to 1 Bitcoin. Everyone who used it was amazed. Suddenly this thing that was, it was purely a proof of concept, and now it has actual value. And as I said, it's, before I checked, it's sitting at about £500 per coin. So you've seen a large amount of price hikes when certain exchanges became very popular, and then you've seen the price fall off when that exchange suddenly has issues. You've seen certain people say, when Greece was having issues and a lot of people were piling money into Bitcoin, because the PR was there, it pushed the price up. I think there's a lot of things that affect the price, and they'll affect them negatively and positively in opposite ways than you think they would do normally. So as far as predicting what it's doing, it's a hard job. But again, if Ross wants to chime in.
I'd say China. Just China as a way for people in China to get money out of the country. So whenever the Chinese start to worry about converting their currency as a non-convertible currency, Bitcoin's a good way for them to do that. The same sort of factors that affect gold, so general economic concerns and uncertainty. So it seems to correlate. Bitcoin US dollar correlates pretty highly with gold in US dollars. And money flow, so the halving will probably be interesting because you'll probably have the same flow in, but half the flow out. We'd probably say they were the biggest three.
Okay, thank you.
What was this halving?
Oh, so the halving is, I think it's 9 days, 10 days, something like that. Essentially, the protocol that Bitcoin runs in rewards miners a set amount of Bitcoin every 10 minutes when a certain person on the network wins the race to solve the equation for validating transactions. The protocol is designed that throughout use, that amount halves. So at the moment, it's at 25 Bitcoin every 10 minutes. It's going to halve to 12.5. So suddenly all of the miners who are investing a lot of money in chips and infrastructure and data centers, their ability to generate revenue is going to halve, which theoretically pushes the price up, but also you're having less Bitcoin being introduced into the ecosystem. So again, the price theoretically should go up. But I think this plus the recent Brexit currency issues plus general unstable government and worries, you're going to see certain assets go up in value. Whether Bitcoin's one of them is something I probably wouldn't claim on camera, but maybe.
I guess one of the points about the halving thing, now I understand it, is to offset the ever-increasing performance of technology that is generating the Bitcoins. So it's supposed to sort of balance it out, right?
Yeah, it's supposed to allow the flow of Bitcoin into the system to be measured and predictable. If someone suddenly put a lot of hash power behind it, that halving would arrive quicker.
So the point at which a halving happens, is that based on time? Is it based on the number of Bitcoins in circulation? Is it based on the ability to... Yep, go on.
It's based on the number of blocks. So every 200,000 blocks, I think, there's a halving. So the idea was that the Bitcoin production profile would look very much like the production profile of something like a precious metal. The more precious metal, all the gold in the world is already in existence. It's just the difference between whether it's below ground or above ground. And as you get more of it from below ground to above ground, you change the economics of extracting that last little bit. You make it more expensive. And so you're fighting that production profile with the idea that at the end there are exactly 21 million Bitcoin in circulation, and there will never be a 21 million and 1th.
And the argument usually put forward is, well, if there's going to be a finite amount, how is it scalable? But because it's digital, you can, at the moment, go down to 8 decimal places of 1 Bitcoin. But it could easily be extended if the value of that became higher than people wanted to. By consensus, people would agree that we need to add another 2 or 3 zeros. So you get a steady, predictable supply without the ability to print more. Thank you.